Boy, oh boy, do we have a lot to break down in this video, guys. We're going to go over a bunch of companies that just reported earnings, including Meta, Chipotle Mexican Grill, eBay, AT&T, to name a couple there. And we're also going to break down the markets, which were all over the place after we got another 25 basis point rate hike from the Fed. So jam-packed video today, guys. If y'all find value, hit that like button. Make sure to subscribe. We're almost at 30,000 subs. And don't forget to get your free money for Moomoo, the sponsor of today's video. Use that link down below. Open up your account and fund it with at least $100. And once you do that, you get 5 stocks right off the bat. And if you fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys. Fund your account with at least $5,000 on top of those 15 stocks. You also get a free share of either Tesla stock or Expedia stock, which makes this a no-brainer. So use that link down below. And of course, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, guys, cheers. Let's dive right into the video. So the Fed raised the rates yet again, 25 basis points, guys, and now we're sitting at 5.25 to about 5.5, the range for the Fed funds rate. And was this expected? Yes, it was. We've covered this time and time again here on this channel, guys, over the past couple of days, in anticipation of today. And like we, anticipated, we got again another 25 basis point hike. And I was reading that this is the Fed funds rate right now. It's the highest it's been since 2001, I believe, if I remember correctly. Make sure to fact check me down below, guys. But that's what I was reading, So the Fed funds rate now is at 20 plus year highs. We're talking a 22, 23 year high, which is pretty intense. And we had SPY, let me show you this, guys, go all over the place today. We had this thing go from right around 454 right before Powell spoke. Then we had it run up to 457, then back down to 453. That was a drop of almost 1%. Then we ended up rallying into close, as you all can see here on the intraday chart, and we had triple Q. Let me pull that up and show you. This was all over the place as well. This thing ran up to about 380 at about 2:45 p.m., then down to about 275, then, all the way back to 280 now pretty much after the bell. So let's break down. I don't want to go too deep into the indexes today, guys. Let's break down some of these companies that just reported earnings and see how their stocks are doing now, as it is about, what time is it? 6:30 p.m. when I'm making this video. So Meta is one that I want to break down, which is up $20 freaking after the bell right now, guys. It closed up 1.4%, pretty good. It closed at $298 per share, and now it's at $320 after the bell. We're talking percentage-wise around 7%. Massive move for Meta Platforms, guys. So let me pull up the live news tab and see. Looks like they ended up doing, let's come down here, EPS of $2.98, which beat the $2.91 expected. And are you surprised? They beat on sales as well, $32 billion versus $31.12 billion expected. And it looks like here, Meta Platforms Q2 monthly active users quarter end were 3 billion people, guys. Holy crap, 3.03 billion monthly active users. That is insane. And they guide for Q3 revenue of $32 to $34.5 billion versus the $31.1 billion expected. Very good guidance there for Meta, guys. Very, very good guidance. And here it says the estimate for Q3 revenue was $28.29 billion. They're looking to do 32 to 34.5. So either way, whatever the estimate was, it's above the estimate, which is great. The stock is loving it, guys. Again, it is up about 7% here after the bell, which is a massive move for a company the size of Meta, Facebook, whatever you want to call it, right? Meta, I guess. Everyone's used to it now being that. So we'll probably do a deeper dive into the earnings maybe tomorrow at some point. So make sure you guys subscribe. But that is a quick glance right now, and it's just unfreaking real the amount of momentum that the bulls have had on this stock for months, and now after the bell, it's continuing. It is unbelievable. I mean, Meta was one that was under $100 not too long ago in the grand scheme of things. Back in November, it was at $88, $90 a share. Now we're pushing $320. From that $88 low, we are now up percentage-wise almost 300%. That is insane. It's been doing very, very well, and I personally own Meta. Do you own it? Let me know in the comments, guys. And no, I didn't buy it at the bottom. I'm not going to be that guy and be like, yeah, I timed the bottom perfectly. But my average cost is right in the 130, 140 range, and let me tell you guys, I'm doing pretty well, and I'm not selling my shares. And of course, I'll let you all know if I do sell them anytime soon. Maybe I'll make a video on that. But overall, Meta is doing very well. It's at a fresh high on the 4-hour chart, probably on the 1 year. Well, yeah, for sure on the 1 year as well. And maybe nearing one on the 3 year. Yeah, getting close, guys. The all-time high, I think, is 384 on Meta. And now we're at 320, 325, guys. We're getting there, guys. We are getting there. And the next one, ladies and gentlemen, is Chipotle Mexican Grill, which, holy smokes, it is doing the exact opposite of what Meta is doing right now. It is down over $150 per share after the bell, which is a massive down move. We're talking 9% drop here for CMG. So let me see what they ended up doing, what's causing this. Looks like, sales missed 2.15, or rather 2.51, if I could freaking read today, guys, $billion versus the 2.53 billion expected. So they missed on revenue, but they beat on EPS. They did. That's good. 12.65 EPS, $12.65 versus $12.31 expected. So mixed bag earnings there for Chipotle on the headline numbers, and it looks like here comparable restaurant sales increased by 7.4%. Not bad, but that is under the analyst expectation of 7.6%. Not the best sign there, but I mean, still 7.4 is pretty good. But whenever you see something, or people out there, investors, traders, see anything come in under the estimate, that's automatically bad. And this is probably all, compiling, or these things are all a reason why the stock is selling off. The fact that they missed on sales, they missed on comparable sales as well. Not the best sign here for Chipotle Mexican Grill, but to be honest, guys, in the grand scheme of things, it got way overbought. It got way ahead of itself, arguably, and we're still doing very well on this 4-hour chart. If anything, this could be a dip buy opportunity, especially as the dust settles. We'll see. And please, guys, as always, do your own research. Don't buy or do anything based on this video. These are just my opinions, and that's just my opinion. It got way too hot, way too fast, and the earnings missed, and now we're getting a correction. It's completely healthy. This is natural. It happens all the time in the markets, guys. So the next one is eBay, ticker symbol EBAY, which is also selling off. It looks like on the day it went up 1%, which is good, but after the bell, it is down 5%. So it went up 1%. Now it's down 5%. Funny how that works, guys. So we have the live news tab here. Let me see. Looks like eBay ended up doing adjusted EPS of $1.03, which beat the 99 cents expected, and sales also beat $2.54 billion versus $2.51 billion expected. So they beat EPS and they beat on sales, which is good. It looks like gross merchandise volume came in at $18.2 billion in Q2 versus the $18 billion expected. That's solid. Gross merchandise volume, okay, yada, yada, yada. So, yeah, not bad, guys. Now they expect Q3 revenue of $2.45 to $2.52 billion versus the $2.23 billion expected. So why is this falling down? That's pretty good guidance, and they beat EPS and revenue for the last quarter. Sometimes, guys, the markets just don't make sense, and even though it's selling off right now after pretty good earnings and guidance, it is still above the 180 SMA, and it's still clearly holding trend here, which is obviously a positive for the bulls, right? No doubt about it. We're holding trend, and, at this point, it's kind of in the similar scenario as CMG. Is this going to be a good dip buy opportunity once the dust settles? It might be. Time will tell. So let's talk about AT&T, which, my goodness, guys, this stock has been destroyed. Today it went up 0.6%. I believe they reported, they definitely reported in the morning. Let me see here. They ended up doing EPS. I think I saw this in the morning. I forgot, though. Let's see here, guys. Looks like they did EPS of 61 cents. All right. Looks like revenue came in at $4.5 billion. Is that right? Or am I reading this wrong? No, it's got to be more than that, right? Yeah, way more than that. 29.9. There we go. $1 billion revenue on adjusted EPS of 63 cents. Not too sure what the estimates were, guys. I'm not seeing them here, but either way, like I said, AT&T now, of course, with the benefit, if I could talk, with the benefit of hindsight, this has been a yield trap, no doubt about it, a dividend trap, if you will, whatever you want to call it, right? And they still have a very high dividend, but it's been high for a while, and a lot of people just simply bought it for the dividend. And this goes to show not every company with a high, fat, juicy dividend is, safe and healthy to buy for the long term. Don't yield hunt. That's what I call it, right? Or not me, but that's what it's called. You're going out and you're yield chasing. Don't yield chase, guys. You have to make sure the company is sound, and clearly it's not doing well. And people that did chase the yield on this thing got clobbered, and who knows, maybe it gets better. Time will tell, but right now T's not looking good, and Boeing is looking good on the flip side, guys. And lo and behold, now it's officially breaking out of this channel that we talked about on this YouTube channel recently, which we talk about stocks every day. And if you have not subscribed yet, guys, which 65% of you guys are not subscribed, hit that subscribe button. Let's try and get the 30,000 subs. Then we're going to get 50. Then after that, 100,000. I appreciate all of you for watching as always, guys. So Boeing, which we covered a couple of days ago, now it went up 9%, is completely breaking out to a multi-month high, probably a high on the yearly chart, maybe. We're at a high on the yearly chart, probably not on the 3-year, but we're getting pretty dang close now. The high on the 3-year chart's about 275, 280. So we had Boeing report numbers. Let me see what they did, guys. It looks like they ended up doing, looks like they lost 82 cents on the quarter, which beat the loss of 84 cents expected, and sales beat by a long shot. Oh my goodness, guys, they crushed sales. 19.75 billion. Are you ready for this? Versus the 16.5 billion expected. So they beat by over $3 billion. I mean, if the stock didn't go up, I would be shocked. So am I surprised? Absolutely not, guys, based on that revenue beat. Let me see here. Anything on guidance? Anything else worth mentioning? It says here, Boeing CEO says more broadly in China, we're encouraged by recent signs of progress, yada, yada, yada. The CEO says focus remains on execution and driving stability in production and supply chain, and we're making steady progress. That is good news. And again, now the stock is completely breaking out. Kudos to Boeing. I like it. Another one that came out this morning is Coca-Cola. The stock went up 1.3% on the day, and they ended up doing, let me see here, guys, adjusted EPS of 78 cents, which beat the 65-cent estimate. That's great. Revenue beat by a massive margin as well. What the heck's going on, guys, with these companies? $12 billion of revenue for Coca-Cola versus the $10.56 billion expected. What the heck are these analysts smoking, guys? What is going on here? These Boeing and Coca-Cola analysts were way off. It's not even close. But let's see here what else. Looks like revenue's up 6%. Okay, yada, yada, yada. So not bad, guys. Not bad. This is one that I think is arguably overvalued as a long-term investment, which we're not going to get into in this video. But as a trade, it looks like it's reversing, does it not? I mean, the charts look pretty good. We have a golden cross here. We're above the moving averages. Now with today's move, and honestly, the last couple of days' moves, we're now taking the highs out from the middle of June. We're breaking out. So this could go arguably to the mid-high 60s. Maybe. We'll see, guys, based on this chart. And the last one that I want to talk about in this video is Hilton, ticker symbol HLT, which they came out with earnings, I believe. Was this in the morning? I believe so. Let me pull up the intraday chart, guys, and see. It looks like they ended up doing EPS, in the morning. Looks like they did, where the heck is it here, guys? EPS of $1.55. Revenue came in at $2.66 billion, and they see adjusted EPS for the full year of $5.93 to $6.06. All right, not bad. And it looks like here, net unit growth about 5%. All right, total revenue up 19% from last year. That's good. And it looks like here Q2 end development pipeline around 440, almost 441,000 rooms. All right, pretty solid. And this stock again on the day didn't do much. I mean, it went down about 85 cents, about 0.5%. Nothing crazy, nothing worth writing home about. And overall, it's right around the 50 SMA. You know, we're holding the moving averages. Bulls are in charge. So let's see, maybe we get, you know, if we get a move off 148, 149.50, maybe, you know, starting to make a move back to the mid 150s. That's what I'm looking out for. So what do you guys think? Let me know your thoughts down below in the comments. Hit that like button and don't forget to subscribe and get your free money from Moomoo. Once you open up your account using that link down below and fund it with at least $100, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys, fund it with at least $5,000 on top of those 15 stocks. You also get a free share of either Tesla stock or Expedia, which makes this promo a no-brainer. So get on it, link down below. And of course, that is an affiliate link. It helps out the channel. And with that being said, cheers, guys. I'll see you in the next video.